Hello and welcome to this week's market report. Let's look at the details of price movements in a somewhat bearish week overall. Oil prices were bullish on Monday following a number of supply disruptions. Further upward pressure came as Goldman Sachs forecast the market is coming out of oversupply. Despite storage levels being at record highs, Brent closed on Monday at $1.55 a barrel, higher than last Friday. Prices closed Tuesday's session flat, before posting marginal gains again on Wednesday. Brent rose as production cuts were announced in Nigeria, Venezuela, Canada and the US. The weekly EIA report showed an increase in US crude stocks by 1.3 million barrels compared to the previous week, which directed prices lower on Thursday. Iran's oil exports are set to surge in May, according to Reuters, which provided further downward pressure on prices. Brent fell $1.75 per barrel day on day, and front month Brent closed last night at $47.62, which is down 5 cents a barrel compared to last Friday. Despite the system being in oversupply throughout Monday's session, all contracts posted gains. Longer dated contracts found support from rising oil prices, and most contracts gained between 0.6 and 0.8 pence per therm. Near-curve contracts softened on Tuesday thanks to the pound strengthening against the euro. Sterling appreciated following below forecast UK inflation. Longer dated contracts took direction from the near curve. Prices continued to ease throughout Wednesday, and most contracts shed half a pence per therm during the day. An increase in Norwegian imports, strong LNG send-outs and lower demand forecasts for the rest of the week all contributed to the falling prices. The biggest losses of the week so far were seen on Thursday. Prices fell despite the system struggling to maintain balance. A stronger pound to euro exchange rate as well as temperature forecasts for the weekend rising above seasonal norms pressured prices lower. Last night all contracts closed lower than last Friday. Summer 17 lost 0.45 pence per therm, whilst Winter 17 lost 0.7 pence per therm. Power prices rose on Monday, directed by a bullish wider fuel complex. Gas, coal and carbon all rose in response to higher oil prices. Renewable generation declined on Tuesday. However, as CCGT provided around 52% of the mix, power prices softened in line with their gas counterparts. An outage at West Burton coal plant is scheduled to finish on the 23rd of May, which has eased the supply outlook. Nuclear availability increased on Thursday, along with higher renewable generation, which lent weight to the peak contracts. Longer dated contracts eased in line with gas as the pound strengthened against the euro, with the latest poll showing the Remain campaign ahead for the EU referendum. Prices fell again on Thursday, with most baseload curve contracts losing around 50 pence per megawatt hour. Last night, all contracts closed lower than last Friday. Thanks for watching, and you can download the full version of this report from our website. We'll see you next week.